Thanks for tuning in to Person Empowerment Money Mondays. I'm your host, Shani Curry St. Ville, making sure that you get richer one decision at a time. All right, so today we have like a really cool guest because I've been getting a couple of emails, a couple of DMs where I've been questioning, Shani, is it a good idea to buy a house? I'm working on my credit. I'm paying off my debt. I still have my job. I am planning for some job security, and I want to know whether or not if it's still a good time to purchase a house. So I wanted to talk to one of my favorite boss babes who has bought over 20 properties, has been in the real estate industry for over 20 years. So combined with that, that is enough resources for some flips, some dips, and some whips, right? All right. So for those of you who are feeling like I've upgraded, right? I've upgraded, right? So I want you to open up your spiritual purse, open up your actual purse, open up your bank account. And even if you are feeling rich right now, I'm hoping that after this episode, much richer. Okay. So some of you just got to start with the imagination. Sometimes I have to be in my imagination too, right? So I'm just going to add a little bit of value to you. You ready? Open up spiritual purse, actual purse, bank account, stimulus check, whatever you got, sis. You ready? Because I'm about to give you some money. What? That wasn't so Shani. That would happen to me. Hold on. I'll just have to do it the way I used to do it. All right, next time there's gonna be more money coming faster. That would happen to me, right? That would. All right, so I'll throw some more money to you at the end. All right. So today we're gonna be talking about one of the questions that I've been being asked, should I be buying a house during coronavirus? And I have my boss babe, Claudienne. She's going to join us on the screen now, and we're just going to get some of your questions. As always, we're giving away some really, really cool things here. Definitely not my money machine. I'm going to relog that. Did you see that, Claudienne? Did you see
saw that?
I'm gonna be better because that didn't work for me. I didn't like it that much. So of course, I'm giving away my book, 10 Things Every Woman Should Keep in Her Purse. All you have to do is make sure that you like me on social media. At the end of the episode, I'll go ahead and I will do a quick raffle. And my money-making pen, for those of you that are writing contracts and checks, we want to make sure that you have something great to do that with. Quick, fast, and hurry. All right, one of them says, I'm not bossy, I'm the boss. So all you have to do is go like my page on IG, and then at the end of the episode, I'll look over there and I'll see. So let's get into the conversation. All right, Claudienne. So you've been in real estate. You've had the opportunity to be a part of a recession before, right? Absolutely. And I believe, and I predict that one is coming. Are you in the same, yes, alignment with thought? Yes. Okay. So what are some ways that you really won in the recession, the last one? What are some ways that you really was able to move forward and pivot your purse?
Nice. So first of all, I have to say thank you for having me, Shani. I'm a big fan of yours. I love everything you're doing about the purse, right? Stuff is starting to make sense about purse empowerment and keeping money in the purse, in the wallet if you're a man. How about that? And so thank you for that. So I really love you for that, and continue to be a blessing to so many people in the world. I think one of the things that I was able to do in the last recession, and I don't want to call it a pandemic because this is like 10x, right? I was prepared, right? I was in full preparation. I was able to save money over time to be able to take advantage in a market that was declining. And so what do I mean by that? We were able to pick up multi-unit properties, maybe not cents on the dollar, but a few cents on the dollar, right? They were very, very good deals. And so that's one of the things I was able to do during that time period, was pick up properties. If I could have picked up more, I would have, but definitely the preparation before, anticipating what was coming, was definitely big for me.
Okay, so the biggest thing that you can say is that one of the things is that you were prepared, right? You were prepared. So those parties that's kind of finding themselves about being prepared, I think living financially prepared is probably the best way, because you can kind of almost predict that, there's going to be some type of financial flux, whether if it's going to come by way of a pandemic, whether if it's going to come by just the economy, whether these massive layoffs, there's going to be something. And whenever that happens, you have the opportunity to really move forward. So oftentimes my messaging has always felt like save, 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 don't buy this, don't buy that. But really the thing is that those that do have some resources available to them, they now have the opportunity to take advantage, right? So now you're not in the position of thinking, okay, let me get my credit score together. Let me save my, 6 to 9 months. So just being in the preparation. So some preparation steps would be what? Credit score, saving some money.
So for me, minimizing debt, saving more money by minimizing the debt. If you can bring in some additional income while you're minimizing the debt, that's always great. Definitely your score, because some people don't have the financial leverage, but you do when you have documented income and your credit scores are at least 640, and even in a market like this, I'd say I'd go and stretch 680 and above, and if you're over a 700, you're slam dunking. So definitely your credit, not wasteful spending. Hopefully you were able to do that before the pandemic, but definitely during the pandemic. And I'm not really sure if many people are buying things anyway. I've been in the house the last 2 months. I haven't even been online shopping outside of, my family going to the grocery store. We haven't even had to get gas because we really haven't been anywhere. And so this has been a great time for me to maximize on my income with my multiple streams of income, Shani, and then also reducing my debts right now. So I think some of it has happened just because we couldn't really go many places. So that was one of the reasons why we were able to, curtail and reduce some of our monthly expenses and debt, and definitely the scores. The other thing is too, Shani, what people can do, especially around the investment world, is, collaborate. It's okay to form an LLC and collaborate with like-minded individuals and say, hey, we've got $5,000 each or $10,000 each. Let's collaborate and start our investment club. That's, sometimes you have to collaborate because you don't have, a lot of money to invest. And I think that's a great option as well.
Okay, so for those of you that are watching, I'm just going to go over those points, just some very base preparation. I thought that what you just said there was a huge thing, because oftentimes people are trying to figure out, how can I come up with an abundance of cash to get a $50,000 property, $60,000, $80,000 property? And so one would be, kind of leveraging with your friends, seeing who has 5, has 10, and those type of things, and forming an LLC. That's a good way to do that. If when I said that and you thought to yourself, oh my gosh, I have no one within my circle that I can kind of leverage with, that is an indicator that you need to really reorganize your circle. You need to reorganize your circle, and you need to add some other things. It doesn't mean that you need to cut off everybody. That's a whole nother conversation. But reorganization is definitely a way to say, there's nobody that I can actually say, hey, can we get together $5, $10, $15, $20,000? That's an indicator of some things that you need to adjust scores, right? 680s. Now, I do know that the Feds dropped the rate, Claudienne, and just with you in doing mortgages, are you finding that right now guidelines are tighter? They're not as lenient? What are you kind of finding?
Oh, definitely. You can have a job right now, Shani, and if it's a non-essential job, we've had buyers that didn't get approved. They're working, but their job was a non-essential job. We found that people that are even in contract, banks are saying, no, we don't want to do the loan. No, and in big banks, your Bank of America, Wells Fargo, Citi, yada, yada, yada. The bigger banks are no longer doing HELOC loans. So even if you own a house right now and you had equity, they're not doing HELOCs. And I remember talking about that a couple months ago, and I knew it was coming because it did it before, in the 2007, 8, 9 market. And so definitely, absolutely.
Home equity lines of credit are obviously not something that's going to be extended in this particular market, simply because values and equity is just so fluid at this time. It's not something that they can really nail down. Right. You also mentioned something else that I thought was very interesting. So you just turned 40 for your birthday last year, right? Right. And you are, and I like to say it because I think that people need to know that women are young, Black, and wealthy. I think that if we are not it, we definitely need to have friends that are. That way we have something to grab onto. We have something to be inspired for, about and for and be influenced about. So that's really important. So I'm always telling people, Claudienne is under 40 and she's also a millionaire, right? Now, what's key, right? The reason why I want to bring that up, right, is because when I'm working with my clients, oftentimes I'm finding that they're not millionaires. They're not, right? Some of them are not even thousandaires, right? However, but when you're listening to a millionaire and the millionaire is saying, I am staying home, I am not going out, I have multiple streams of income, I have not even been online, I haven't shopped for anything. Oftentimes when you don't have the $1 million, sometimes you just need the habits, right? You just need the habits first, because habit after habit is going to create very similar results. Similar is the key word. But when I'm working with my clients, Claudienne, what I find is that a lot of them are shopping on Amazon, heavy Amazon shopping, heavy Uber Eat bills, heavy just, when I look through your shopping and I'm seeing the things that you're buying, and oftentimes I'm saying, where are you going? I bought this, I saw this dress, I saw this outfit, but sis, you're not going nowhere right now. So it's really like the reason why I really thought that was very key is that you are someone who has resources, you do have wealth, but you were saying, I am staying home, I am not buying anything, versus someone who does not have as many resources, having that need to constantly buy and buy and buy. Do you see the habit switch that needs to take place here?
Absolutely. And, it's really a mental and a mind shift. And so some people are thinking about they have nothing to do, so I'll shop today. And while I can shop, I just haven't given it the thought. And I really don't even have the time because I'm reorganizing. I'm organizing and getting prepared for the market collapse. It doesn't mean that I'm not sympathetic. It doesn't mean that I'm not praying for those who lost loved ones. But the fact still remains, the richer gets rich in markets like these. And, I'm wrapping my head around maximizing my dollar today, minimizing my debt so that I can have more leverage to buy that 20-unit building, to buy that commercial building, to pay off anything else that I can pay off, maybe even buy things cash, Shani. And so right now, my mental shift has been, wow. And in fact, it's been that way for the last couple of years, because there are certain indicators in a market that will allow you to understand when the market is about to take a collapse. And no, I didn't know it was going to be COVID-19. And I'd be honest with you, whether COVID-19 was coming or not, the market was headed into a direction of collapse. And so now I've had the ability to see what that looked like before. And I'm very resourceful and I share a lot of this information. What I find is that people scrutinize me for sharing the information. And I say, well, you know what? It doesn't really matter because most of the people aren't going to take my advice anyway because they don't believe that it can happen. So a lot of it is really your belief and what you can do. We focus so much on what we can't do. And some people have shopping habits because they're depressed and stressed. That's just not my thing. It's really, honestly, never really been my thing. I'm not really an avid online shopper. I'm not the shopper that I hate the malls. I love Home Depot and Home Goods. It's ironic, right? Right. So right. I like to renovate. So those are my two favorite stores. And that's really the things that I like to do.
Yeah. So actually what I find with my clients, actually those that have more resources versus those that have less resources are typically the ones that I have spending more are those with less resources. I remember when I had less resources, I would be more of an emotional shopper. In fact, the more money that I got, the more conscientious I became, because and what it takes for you is no matter where you are, sometimes it's that first 1,000, sometimes it's that first 10,000, and then the next one is that first 100,000, and the next is the million. You just keep going and going and going, and you begin to compound. So if for those of you who are listening and you're going to go and look at your bank statements and you're like, gosh, I'm not in the position to take advantage of this recession that is about to happen. My credit score is not where it needs to be. I don't have any savings. Well, this is the opportunity. It's coming again. You can almost count that in the next 8 to 10 years, it's coming again. And do you want to be in the same position then? Right? Do you want to be in the same position? So if you're listening to someone that says, listen, I have property, I flip property, I have landlords, I have tenants, I have all this stuff, and I'm not shopping, I found something else to do with my time. That's an indicator, a habit change that you can make right now.
Absolutely.
All right. Absolutely. So I'm for habits
And
change.
I'm actually of the opinion before you give me more money, that if somebody has, credit issues right now, I think that they actually still have time. I think that there is still time because we've got to go through a process, that they're going to say the federal government's going to give all this money. Most people aren't going to get it. And then they're going to be forced at some point. You either got to sell at a lower price, do a short sale, or lose your house. I know I've been inundated with BPOs, broker price opinions. They're usually going on when people are going into foreclosure. And I hadn't gotten that prior to the pandemic. And so we're going there. So if you don't have your credit score at least together, because you can leverage your credit, guys, we still have the FHA 3.5% program. We still have grant programs going on for those that don't want to invest and just want a house to live in. That's also an investment, believe it or not. So definitely, I think that they still have time. They should definitely reach out to you.
Yeah, you still feel like they still have time to go ahead and start handling their credit issues. They also still have time to start saving some money to get in alignment, to catch this boat or the one that's coming after this one, because there's always a boat. There is always a boat. There's always a boat. You just gotta have that ticket. Yeah, have that ticket. All right. So you mentioned a little bit about grant funds. Are you seeing, because in some of the other industries, I'm seeing where grant funding is starting to dwindle, not just in housing, but in different research and all these things. So my prediction, when I see things happen in other industries, I start thinking that that's going to also happen in the housing market, where you're not going to have as much access to grant funds, because there's the rental and utility fund now. So some of that money had to be reallocated. Are you going to find that is that money, the grant funds, kind of going to dry up? What are you kind of predicting?
I don't believe so. The grant, well, I can speak for Miami-Dade and Broward County, and even onto Palm Beach counties. They're more than, the grants are still there for first-time homeowners. And remember, first-time homeowners mean that you just have not owned a property 3 years prior to the point that you're going to buy, right? So that's the definition of first-time home ownership. It does not mean the first time you've ever bought a property. And so those grants are still there. And in fact, I remember in 2007 and 8, Obama put something in place called the NSP program, which was the neighborhood stabilization programs. And it came from the federal government, as long as the cities or municipalities, depending on where you live, bureaus, wherever you are, as long as those municipalities, cities, or bureaus requested those funds and filled out the RFP, request for a proposal, they were pretty much guaranteed or funded, and it was millions and millions of dollars. And so why were those programs created? Because we started to have blighted blocks and homes with 10 vacant homes being vandalized. And so the city was able to come in, purchase those properties, renovate them, and then grant buyers up to $130,000 between down payment and repair costs to those homes. And I tell you, that was in the last market crash. And I'm going to anticipate seeing more of those programs come around. So I don't anticipate seeing less.
Okay, so you're finding that you're saying, hey, listen, you still have time. That funding is still going to be available, and it's going to be in abundance. So you should definitely put your hat in the ring. All right, so there's another question that was kind of moving around this conversation, is like whether or not, and you had a very interesting perspective on it, whether or not if you can pay your student loans as well as begin investing. So, and actually some people were saying, there was a conversation going around saying whether or not if you should be, thinking of buying the house or paying off your student loans. Which thing should you be doing? So you have an interesting perspective. I'd like you to expand more on that.
All right, so I think it really depends on the person's income. If you can maximize, I know we always have this discussion, you're like, Claudienne, but some people can't cut their expenses. Then they need to increase their income somehow, some way, get an online business, figure it out. Or, and I think it depends on what is going on. So if you have the available funds to do it, then you do it. You pay off your school loan in portion, and then you can invest. But if it were me, most people don't. The average person does not have the money just to go pay off their school loan. One, they probably wouldn't have the school loans to begin with. And two, if 10 years have gone by and they haven't made a payment or made more than whatever the minimum payment is, they probably don't have it. And so guess what? I'm of the opinion, guys, that I would not pay off my school loans first. I would get into an investment club with a few friends if I had to, or I would leverage my credit if I could and buy a property in this type of market, sit on it and flip it when the market gets better. Guess what? You could literally wipe out all of your school loans, or you pay a portion, you take some money and you start to reinvest. And you start to reinvest in duplexes and 4 units and 3 units, they're still considered residential. Anything below 4 units is considered residential in the bank's eyes. Some cities will say, no, you still need your business tax certificate, but that's one other area. Isn't it better to be bringing in $25 additional $100 a month and paying at least $1,000 towards your your school loans, instead of taking the money that you potentially can get your hands on and just paying off a bad debt? To me, that debt does not make you any money. So I wouldn't do it. I wouldn't even do it for credit cards.
Okay, so I'm thinking that one of the things is that is a very unconventional approach to achieving your goals, right? And when achieving massive goals, you can't think that going about it in the most simplistic way is going to get you some of those extraordinary results that you might be predicting. So maybe your habit is just, let me go ahead and pay this, let me pay this, let me pay this, let me go ahead and knock this down, and you just feel the lack of just paying your student loans. I know that like a lot of my clients, I really try to do a lot of like mental reframing in terms of like their student loans, just so that, you know, even if you fall within the 1% or the 10% that gets this, then you have the opportunity to fall within the 1% and the 10% that gets this, you know, awareness.
Mm-hmm.
And number one, I think oftentimes people have a negative affinity towards their student loans because they think they're like, it's like this entitlement kind of thing. You know what I'm saying? Now, I don't like the way the interest rates calculate daily. That I don't like. I don't like that. I think that it needs to be outlawed. I think that legislations needs to do something about just the way that student loans are tabulated. So yes, but in terms of being able to move forward, it does require that same habit change that we were talking about in the beginning as it relates to, you know, not being this excessive consumer, right? Just constantly. And one of the conscious questions you can start asking yourself is, what else can I do with this money? That is always the question to ask yourself when you're spending, when you're going to make a purchase. This was like, what else can I do with this money? Where else could it do? You know, just getting out of the habit of that and looking at your student loans differently, where you have the opportunity to say, gosh, who do I know while paying your student loans, right? While paying your student loans. And oftentimes some of the things that I'm often recognized, because you don't have to pay your student loans up until September, they're not going to be reporting all these different things like that. So one, just keep putting that money to the side. You know, don't act like, you know, you're getting a break. Just keep putting the money to the side just so that you can see money. Sometimes people just have to do things so they can see money.
If you can pay your bills right now in the middle of the pandemic, I'm of the recommendation that you don't stop and getting out of the flow. Yeah. And the other thing is that it's a mental shift, because what happens is that you start paying down your student loans, but because they're so big, you can't foresee that it's ever going to be paid off because it's so long away, opposed to going to the store or going online and getting that product, especially if you're using Amazon, in 2 days, right? In 48 hours, you get it right here. It's immediate gratification.
Yeah.
And when people start to make a mental shift, and let me just go a little bit deeper. If we're discussing school loans being an issue in our adult life today, we've got to do something different for our children. I see people living their dreams through their children. And so instead of going to an in-state public school, they send them across the way out of state, which is double, you know, sometimes triple, you know, and now we're putting our kids in situations where when they get out, they're not even majoring in things where they're going to even get a return on that money. And so we got a degree, but most of these kids can't even get jobs. And so I think we got to go a little bit deeper, start putting our foot on our kids' necks and do well in school and obtain scholarship. There's an app right now, Shani, where you can put in the criteria of the student and it will spit out everything that child can apply for that they're probably, you know, going to get. But guess what? Nobody wants to use it. I used it. You know, my son got a full scholarship, right? Whether he was going to play basketball or was going to be academic.
Right.
We had options. It's like we just got to go a little bit further, because if we keep putting ourselves in this situation, and student loans seem to be the worst debt on people's credit, believe it or not.
I think
some of them are deferred, they're not even paying.
Yeah, I think part of it is a lot of it has to do with, like, people don't really think of student loans as a loan. Somehow they think of it as a grant. Like, they don't think that, like, it's not free money. It wasn't a scholarship.
That's the one thing you cannot do in a bankruptcy. You file bankruptcy, you can't even put your school loan in there. So you might as well pay it.
That's how they kind of feel about it. But you mentioned some very interesting things. So I always want, just to get people to kind of think about their student loans just a little bit differently. Stop thinking about it as a way for you not to be able to move forward. So you did mention some very interesting things, some very non-conventional ways, saying, hey, let me try to communicate with some of my friends that are also in debt just like me, and let's see if we can pool some of our money together. Places that you can get that money is when you get your tax returns, right? You get $3,000, $4,000, $5,000, right? You can kind of pool that money. Claudienne looks frozen. Are you frozen?
Am I frozen?
Not anymore. All right. All right. So pull that money together so that you have the opportunity to, if you do make a purchase, you can use the money to pay down your student loan debt. That is definitely a way to think about it. So I would say not to let your student loan stop you. Another thing is that with you not being, so obviously neither Claudienne or me, neither of us are advocating that you don't pay your student loans, because you would not be able to qualify for any lending anyway if you're not in proper standing with your student loans. So it's just, you wouldn't even be able to qualify. You have to make sure that you're in payment. You have to make sure that you're in an amortized payment, not just one that's just interest, because otherwise they're going to project 1%. That's a whole nother story. So obviously you do want to be paying your student loans, but what I'm offering over is that don't let your student loans stop you. Start thinking about, okay, yes, I do have to pay my student loans, but how am I able to also leverage? What things can I do? How can I pull some money together so that outside of these student loans, I can begin to grow and begin to pay down some of this debt? Some of the things that I've recommended to some of my clients that are hugely, you're 50, 60, 70, 80,000, hundreds of thousands of dollars in student loan debt is, number one, oftentimes you need to get yourself a part-time job. That's going to be a little bit different now, right? You need to bring in some additional funds of some additional streams of income. You need to get creative about that, even in this market. Is it going to be as easy as it was before? There's probably going to be some more challenges that weren't there before, just because the gig economy is hyping up. Everybody's going, once we get back in there, everybody's going to be doing Uber because they're going to be trying to catch up. Everybody's going to be doing all the easy plays. But this is definitely the opportunity to start thinking about that, not just thinking about how I can eliminate debt, but you also have to think about growth. And I think that's one of the hugest takeaways that we can take away from Claudienne today is just don't think about your debt, but think about growth.
Woo.
Do we think?
I think we think so. I don't know if the people were able to write notes though.
Yeah, no. Okay, so for those of you who, if you have someone needs some, Claudienne, someone wants the name of the scholarship app. Can you think of that scholarship app, or can we drop it in the comments later?
I can let me get it, and then I'll drop it in the comments later.
Okay, we'll drop it. Shonda, thank you. And make sure you go and like my purse empowerment, because you just won yourself a book, 10 Things Every Woman Should Keep in Her Purse. Okay, that was a really good question. She's going to drop it in the comments. Some other stuff that we're going to drop in the comments is where you can go and sign up for a first-time home buyers class. That will give you some hands-on information about where to get grant funding. So I'm also going to drop that in the comments. We got quite a bit of questions about student loan debt. We talked about your credit score. We talked about even communicating with some of your friends so that you guys can pull some of your money together and begin investing in the market as an additional way to pay off your student loan debt. We talked about the recession. The last recession, I had the opportunity to purchase my second property. It was really crazy, right? I talked about how, number one, we had to make sure that when we purchased the property, there's another question. When we purchased the property, we actually did not purchase the property for, like, it was on the market for 60. And then we actually had to offer more than what it was on the market for, right? So that's one of the things that I know for sure, like in the recession, because there's just so many investors there. And while you're trying to wait to get a loan, they have cash. So that's not the opportunity to really be playing around in the market, right? You want to touch on that a little bit? Go ahead.
I know that was one of your questions. Should you buy now in the pandemic opposed to waiting? And so it's a twofold question, right? Because what happens is that if you have good credit, good income right now, what I would recommend that you do is buy now, but make sure you have a good real estate professional. I plug. And if it's not me, I'm not insinuating that you only have to use me, but you definitely need to be using a realtor that knows skill and that's a hard worker. Hustle is great, but you at this point in the game, you need skill. And so I would recommend that you get a professional. And let's just say a house is on the market for 300. If you can get them down to as much as you can, great. Because what's going to happen is these people, you think everybody's, broke and doesn't have cash. It's not true. Those people are going to outbid you every time, every time, every time. You're going to get frustrated. You're not going to find yourself a good deal because there are people who prepare for markets like this. It's the 5%ers, but they're there. And so I definitely say if you have great credit right now, if you have income right now, definitely do your negotiations now to anticipate for where the market is going. And if this is a house that you're going to be living in for the next 10 or 15 years, you'll be able to weather the storm. The market's going to go up. That's what it does. It goes down, it comes up. It goes down, it comes up. History shows us that. And I've got 20 years experience in the market. But even prior to me, when the first recession happened in 2007 of my professional life, my adult life, I had to go back in history to kind of see what was going on so I could anticipate what would happen in the future. And so definitely don't get all, oh my God, I don't know what's going on in the market. Now, if you're concerned because maybe you're not going to have a job in the next 2 months, that's a different situation.
Right, totally, right? So one of it was, getting that property, number one, is that there were other investors in the market, so we had to make sure that we overbid it for it. The other thing is FHA versus conventional. Let's talk a little bit about that. Let's talk a little bit about a great realtor and a great lender. Yeah, Shani, you trying to win everything. I'm about to send you some money, girl. All right, hang in there with us. All right, so Claudienne, that's another thing, right? So that whole skew between, okay, do I have to go FHA or have to go conventional? At that particular time, we had to go conventional because we had to do so many repairs to the house. So that may change things for you a little bit. Talk a little bit about the differences between FHA and conventional.
Even with conventional, your house still needs to be in good, at minimum. Like you can't have a hole in the ceiling and get a conventional loan. You can't do that now. And you're certainly not going to be able to do it then. I'm not really sure. I don't remember what we could do back then. And a lot of times people did use the conventional. But I'm telling you, we're using FHA renovation loans like clockwork. They're still there. They're still good. But again, you can't just be using the lender because they're your friends. Listen, I have a lot of people I know that are good friends of mine that are lenders, but I can't send all of my clients to one person because they don't specialize in certain things. So I might, call one rate bank because that's all Todd does is renovation loans. Like he can do them with his eyes closed. He's going to do them in 30 days. He's not going to have to wait 90 days like a traditional person might have to wait because that's all he does. He doesn't even want a regular loan. So definitely I would recommend for houses that need repairs, you got to start with a good real estate professional because the first thing you need to do is get your foot in the door over the investor, which means that someone has to sell your offer. Listen, nobody wants to deal with an FHA 203 or even a conventional renovation loan against someone who's putting 20% down. So be prepared on the front end. What does that mean? When you're submitting your offer, submit your DU, your underwriting approval. Yes, it's going to have your scores on there. Yes, it's going to have your debt on there. But the prettier you can make that file to submit, the more confidence that the selling agent has on the opposite side. So I'm most times a selling agent. I work for a lot of people who want to sell, and how you present an offer means everything to me. It means what type of bed I'm getting in for the next 45 days, to be honest with you. And so that's a major consideration. So offer preparation is important, Shani. Some sellers will say, well, we want to give this family a chance, even though they're not cash, because we had a chance. And you have sellers that are like that. So don't be discouraged, but you can't go in there with a handwritten contract and a pre-approval. I could write a pre-approval. Get an underwriting approval. Let them see your credit. Let them see your debt. Show them your bank statements. Show them that you do have some leverage in the bank if you have it. Maybe you don't want to use it all because you want to take advantage of the lending, that goes along with it. But as strong as you can make your offer, make the offer presentable and make it strong.
All right. So, and then the other part, those are all great points. So then at the end of the story, when investing, what are the common pitfalls that can be avoided, especially when pulling together funds with friends? Excellent question, Saisha. I
So
hope.
do you want to answer that or you want me to answer?
No, you got that one all day.
Okay, so Sasha, I hope I said your name right. I would definitely, one again, you're either going to get with a seasoned real estate professional. See, when I got into real estate, by default, this was not something that I planned to do. I became a realtor and became an investor at the same time. So you've got to have somebody with experience, with numbers, how to assess repairs up front before you even get to the inspection portion. You might even want to add an attorney, to get involved for the formal, so you can formalize your LLC. And if it's more than one member, guess what? You need an operating agreement. You need to make it very clear on whose responsibility is what can happen all the way down to if someone is not here the next day, right? So you want to make sure that you're spelling out the terms of the agreement. What are the responsibilities? What's the profit share? You just want to make sure if you're going to be having meetings every month, who's recording the minutes. And so definitely you want to know everything on the front end so that nobody's confused. Nobody does it. Oh, well, we didn't know. No. And I think I would like to say a good asset to a lot of investment groups. And I've been interviewed at some of them. And I've been selected, out of realtors that have been interviewed. And so I'd have to say thank you to those investment clubs for even offering me an opportunity. How to buy from the courthouse is important. Am I doing a title search first, or am I just going out there and buying?
Talk about some of the things that have kind of went poorly. I've never been a part of an investment club, but as it relates to any real estate. So think about some of because I know you've shared some stories with me. What are some of the things give me two things that went poorly and then two things that went well in some of the investment groups that you've organized or been a part of?
Underestimating the cost of repairs. Not following the details and the guidelines of the operating agreement, meeting once a month. Sometimes we get so busy, a property's sitting there for 3 and 4 months, and now we've missed the wave of the equity. That has been a bad thing, that I've seen. Definitely underestimating repair costs. Sometimes you think, oh, the kitchen just needs to be replaced, and now all of a sudden the plumbing now needs to be replaced too. You didn't calculate for that. So those are some of the things that I've seen that's happened. I've seen people go on a contract without doing any analyzation of numbers because they just don't know, right? I've seen clients say, well, I'm going to go buy a duplex for $300,000 in Miami. I'm like, there's no way. There's nothing in Miami-Dade County that you're going to buy for $300,000 and make a return right away. It's just not happening. Send me the numbers. I said, you shouldn't even looked at this property. Look at the numbers. They're right here. And I don't care if you're paying for that property cash, you still have to make that money back, right, in a return. So definitely looking at the funds up front. Now, what are some good things is that people get to pool their monies together. And so I've seen investment companies, organizations come together and put a monthly fee. I've got 4 people in an investment group now, Shani, where one person puts in 500, this person could afford 300, this person could afford 250, and this person could afford 650 a month. How long are we going to be in this agreement? Every year, every December 15th, you have an option to pull out or to keep going. But if you keep going, you're in it for another year. And so I like that idea of pooling monies together. And then I've also seen some groups that say, hey, we got 10 grand, get 10 people, let's get $100,000 together and start doing our investment.
Excellent. How soon after purchasing your first home should one purchase their second property, Claudienne?
So Nelly, can you clarify that for me? Because, I have this thing that if you're buying a house to live in, it's pure debt. The other day I had to fix my sprinkler system and the pump went bad. That was $500, right? A little bit more. And then the palm trees got to be cut. That's another $500. Then I got 2 ACs at my house. So they both collapsed, one behind the other. That's another 10 grand that I had to spend. And the thing is that I live in this house. So this house really is debt for me. So what I did, I'm going to answer your question 2 ways here because I think this is important. And I'm not really sure if your first home is what you're going to live in. And when people say home, they typically mean single family home. So I'm going to go with that. If you're buying a home to live in and now you want to buy something else, I'm not for that. I think that you should buy your investment properties first so that you can leverage the income. That's debt that will not be counted against you when you go for the next property, if that makes any sense, because you have tenants paying the mortgage every month. The bank is going to take that into consideration, so your debt ratio is not tight. So I bought 3 or 4 properties before I bought my first home, and I rented the entire time. There's nothing wrong with renting as long as you have a plan, right? Short-term sacrifice, long-term gain. And my house is beautiful now, you know, and I don't pay bills here.
Yeah,
they pay the
that
bills
was a
here.
huge takeaway. That was amazing. That was a huge takeaway. So for those of you who have not purchased properties as of yet, think about it from that stand. That's actually something that I wish that I would have done when I bought my first property. I was just so happy that I could buy something. I could have ownership, which is great. That's a good first step to even be thinking about that. That's great. But to wait to really move up, I was looking at the person. I'm gonna have to get my charger in a second. It's acting funky. And then I'll hold the thing to my face. But what I was thinking is that the girl next to me, she at least had enough sense to get a 2-1. So when things got bad, she was renting out of one of her rooms. I was like, oh my gosh, it was crazy. That's just one of the simple things right there. Claudienne, while I recharge my phone up, what I want you to expand on is that is a great first step. And if you have the opportunity to do it again, then definitely that would be the best way to do it. But however, the larger demographic of people have already bought that first property. So if they've already bought that first property, how soon would you say they would move on to the second one?
As soon as the good deal comes. If it came tomorrow, bye. So if you already own your property, guys, let me just see here. I don't know how to get these questions back up on the screen. We need Shani for that, but oh, there it is. So just go back. If you already own a house, guys, and you're looking to buy another house, right? Definitely when the next opportunity presents itself, then it's definitely the time to buy. And you'll know if the numbers are right. That's not something, when I first started, my goal was to buy 1 property a year. But then deals started coming. I'm a real estate professional. I chose that. I honestly chose to be a realtor because I realized I was the person that was going to have the cap on my income. So I knew I could go to the sky, and the sky had no ceiling. And so for me, being a realtor, I made a lot of money. And so guess what? Opportunities started to present themselves 2 and 3 times in a year. And so I moved from 1 property a year to 2 and 3 properties a year. So, and then there are times where I don't buy a property in any single year because the
All right,
market.
so let's define that a little bit. Well, hold on, slow down a little bit, Claudienne, because that was a really good jewel there. So let's go back just a little bit. You're saying that one of the things that you would say is as soon as you could buy the second property, how soon should you buy it? How soon should you buy it?
As soon as the deal is available.
Okay, so how do you make that as a determination? All right, I've already been in this house for 6 months, right? I've already made it in this house for 6 months. You may be up under FHA guidelines if you bought the house first. So you've already signed something saying that you're going to occupy this residence for a specified amount of time. All right,
FHA guidelines don't say that. They say
okay,
you must have the
you know that one gets racy. That particular part gets racy. So expound on that just a little bit.
There's nothing with FHA that say that you must live in a house for a period of time. That's a misconception. It says you must have the intent on moving into the property. You could do so if I bought a house today and I got a job opportunity making double my salary, I'm gonna rent my house out. And I'm going to go and purchase somewhere else. And you can buy FHA again as long as it's 100 miles away.
So when we talk about this intent, which I love the word, play on word, is excellent. That's great. But have you seen that go down for people? Like, say, for instance, like, because I've had a couple of situations where people saying, hey, I intend to occupy this. And then they had people from FHA insurance coming to their property. There were fines involved. There were all types of stipulations. So what is the probability
if someone buys a property that's FHA and they are forced to move because of job relocation, their parents got sick, and the store, and you can document it, you can buy FHA again 6 months down the line, as long as you're 100 miles away from the initial property that you purchased.
Great point. So now that we clarified that, so the first thing is hey, you're in this house for 6 months. You should be looking to go and purchase your second one. This is amazing. You're welcome, Salsha. Okay, so I hope I'm saying your name right. I need to see another question from you. There was another question that left on the screen. I need to see it again.
It's here. I just figured out how to put them on the screen.
What are in place that we should be alert about when pursuing grants? Thank you, Alexis. Yeah, we'll go back to the other thing, but can we talk about some of the stipulations involved in securing grant funds for purchasing a property?
Typically, when you're getting grant funds, there is a clause that will tell you if you don't live in that property for 10 years, you must pay that property back. Whether you sell it, relocate, put a tenant in there. If you are not, remember, grants are for people to stabilize the market. You can't be moving every 2 years and call that stabilization. So it is designed for you to live in a house for 5 years. Sometimes grants say 10 years, sometimes some of them are 15 years, or you must pay those grant funds back. But what I've seen, and you have to be very careful because people have rented their houses out, and the one bill that does not forward to your forwarding address is your tax bill. That will go back to the county, and it's a red flag. They will catch you, and the penalties are not nice. And I'll be honest with you and transparent. I moved, we forgot it had homestead, and we were hit with so many fines. It was ridiculous. And so a 4,000 tax bill turned into almost 12 grand over a period of 2 or 3 years. Now this happened a while back, but it still happened. So you got to be careful with that. And that was just a tax bill. That wasn't even a grant situation. So you want to be careful. And if you sell your house, it's fine. You just pay the grant funds back. And in most people's cases, there's so much equity, you can pay the grant back and make money in your pocket.
So I hope that answered your questions. I'm trying to think about some other stipulations associated with grants. One of them is sometimes I've seen that it take a little bit longer to close, Claudienne.
If you're not with the right lender, absolutely.
Yeah, so sometimes,
30
right,
days.
yeah, sometimes that can kind of drag it out, but that's probably the only frustrations that I've seen. One, where people had to pay the money back because they too soon, or secondly, that the process, because of the immaturity of the professionals involved in the contract, were not able to respond to deadlines as fast, so that caused the process to go on long. So if you're with someone a little bit more seasoned and has worked with first-time home buyer programs before, that tends to take a lot of that out. And those are pretty much the two things that I've seen kind of get weird in the grant fund transactions. Notifiers for knowing that funds are available, Claudienne. Like sometimes people do complain to me like, okay, Shani, you told me about this particular grant fund and things like that, but the funds are gone. So what are some awarenesses? I mean, other than being that's probably going to be your answer, but if you have another one, give it over. But, just making sure that you are in the right real estate house so that when grant funds are coming down the pipelines, you have awareness about it. Some other tips that you'd like to share about knowing the money's available?
Yeah, so number one, always pair yourself with a mortgage professional, not even a realtor, a mortgage professional that does not see. When you have a bank sitting on a corner, they have to do a certain amount of CRA loans. And so they typically have a specialist that does nothing but grant funding loans, right? And so I'm always of the opinion to go to the person that does them every day. They know what's going on in that market. They attend workshops. Realtors don't really do it all, but a mortgage professional that does nothing but grants, it behooves them to know what grants are available. So definitely there, you're going to probably have to take an 8-hour home buyers course. So that institution, make sure it is a HUD certified. If you are paying to go to an 8-hour course, do not go there. If you're going to a realtor that's saying, well, you have to give us $2,500 deposit for your escrow before you even get into the classes of the house, run. Don't even walk, run. Fire them right away. Free 8-hour course. They usually have all the resources of what grants are available. And if you are interested in a particular city, cities are in counties here in South Florida. So I'll give an example. North Miami. You want to move in North Miami. North Miami administers their own grants. You can go online to North Miami, go to community development, and the grants that are available are there, right? And then I know that North Miami is in Dade County. So now I want to know what grants are available in Dade County, and you can stack loans 2 and 3 and 4 grants at a time in one transaction.
All right. So hopefully that answered the question. Now, I just want to round this off a little bit because I know for some people, that's one of the ways that once you can make that second property jump. Claudienne, would you agree that you're really, you're ready to become a real estate investor? But sometimes I see a lot of people, they get stuck in that first house, right? They can't ever make the second one. So I do want to revisit that question because I do think that it's
Are they living in the house? Are they stuck because they're...
I think that the mentality of it, right? It's the same mentality that you have with student loans. It's the same mentality that you have when you go and get, a 72-month car payment. It's the same mentality that you have where, I'm going to pay off this house in 30 years as opposed to paying it off in 15 or opposed to paying it off in 5 or 10. So it's just a little bit about switching that mentality regarding your money so that you can move forward a little faster. But I do find that a large population of people just mentally get stuck in the first house. So you were giving some good takeaways. So number one, you were saying that 6 months is a really good mile marker to decide that, hey, you know what, I'm going to go ahead and now buy that second property. Yes?
I said 6 months. You said 6 months.
Well, I'm trying to be, what you saying?
I said right away, if you have the capital and you have the debt ratio that can fit another loan, why would you miss out on the opportunity? It really depends on the individual person.
What if you don't? But what if you don't? Because what I'm finding with a lot
and that's something that we can't answer them when they are ready financially.
We can give us some tips to work up to, because normally what I find when someone comes to me, they've just bought too much house. They bought too much house. So they've gotten a loan, it's for $300,000, $400,000. So now the amount of money that they have to invest, so that probably will be the first thing. If you haven't bought a house just yet, right? Just because they say, hey, this is how much you qualify for, that doesn't mean that you have to take that total amount, because that is going to prolong the opportunity for you to get into that second property because you just have so much debt. So the first thing would be is not to take too much off not to bite more off than you can chew, even if they say you can digest this. Look at that space between your income and your payout and things like that. So that's number one of the things that cement people into that house. So the other thing would be, you're saying once you're financially prepared to go ahead and get another property. So would financially preparation for you, Claudienne, mean that you would, okay, you're in the second property. Let's say you're in the typical seat of a lot of my clients where they bought out too much house. Would it be, okay, would they be working up to going ahead and now renting this house out so they can purchase another property? Or are they writing out that equity so that they can go ahead and use, take equity out of the house? What are your thoughts on that?
I just think it's a bad decision. Let me tell you, the average American, and I don't mean American, I mean the average person living in America, ratios are very tight to begin with. So if you buy a house, you're screwed, unless you're going to go make some more money somewhere else. And it's not typical because people are very complacent as long as they can pay their bills. When you go look for a car, most car salesmen want to know what your payment is. I don't want you to know, I don't care about a payment. I want to know how much you can bring this car down, because I might pay cash. I might. So don't worry about my payment. I want to know what the overall cost is. But the average person, Shani, is not going to be able to buy a house and then buy an investment property. They don't have the leverage. And so when you talk about what's norm, that is norm. And I do over 100 transactions a year. And I can tell you very few have a large, their income is here and their house is here. It just doesn't happen that way, no matter what you tell the people. So I'm really against buying a house before you buy an investment property. It just doesn't make any sense to me. And because people can't change their mental, which we know they can't because they don't pay down their school loans, in fact, they forget that they're even there and don't pay them at all, it's going to be the same situation again.
Right, but Claudienne, I know, but there are a few people that probably are tuned in, and a lot of my clients, one of the things is, if you have not bought, that's the first thing. That's just a steal right there. If you haven't bought, let your first property be an investment property. That would be first one, right? That is something that I even learned by buying my first property. I thought you should have bought an investment after I got into it and lost my job 6 months after it. So I knew, like, you should have bought an investment property. So for those of you who did not purchase your first home, don't think about that. Think about an investment. But if you fall within the high probability and your demographics are a lot like my clients now, where they have heavy mortgage heavy car payment, heavy student loans. You have all of those different things, right? And one of the ways to be able to kind of unravel this financial mess that you've made would be to make some type of investment. So I'd like to try to give a little bit of suggestion to people so that they can go ahead and do that, because I would like to see people buy their second properties. I would, because once you can make the jump there. So things that you can do creatively will be what? Could you go ahead and rent out the property that you currently occupy?
You'll hear Gary Vee and Grant Cardone, which I don't always agree with, but you'll hear them say, you need to sell your house, go rent, so you can leverage and go buy some investments or do whatever business idea that you wanted to do, right? I did mine a little bit different by design.
I gotta keep pace with you. Hold on, I gotta slow it down because you know you be coming with it, and I want to make sure people got that. So one of the things that you're saying, you are in alignment with Gary Vee, that one of the things that you should possibly consider is going ahead and rent out your house. No.
Gary Vee and people like Grant Cardone, they rent. They don't own their houses. And so if someone wanted to take the financial burden off to start investing, I would recommend they sell that house, because to make one income from one single family house isn't going to be a lot of money. I'm just telling you.
So
I don't own any single family homes.
Okay,
I
got
would
it.
Sell, take the equity, start investing in property if that's what you wanted to do. And in this case, they want to know, I mean, you can rent the property out. You can.
All right, so hold on. I got a question. All right, so yes, you can. But here's where this gets interesting is that, okay, if you're deciding that, cool, I got this property that I can go ahead and sell because I did it wrong, right? I did this wrong. I just got myself in way too much debt. I was following what the people say, Americans say, you got to own a house and I'll be richer, right? Great. So you're offering a possible suggestion to this is go ahead and selling that property and then go ahead and start renting, right? But I'm just going to ask this for my clients is that, okay, but Shani, the interesting thing about living in South Florida is that the cost to rent a property is on par with where my mortgage is. So exactly how am I going to move forward?
It's called short term. It's called you want to live with the Joneses. You can definitely take, I don't know what type of house it is, but let's just say it's a 4-bedroom, you're paying $3,500, but you really could, you said they bought too much house. So I'm assuming that they can minimize where they're moving. To rent a 4-bedroom house and to rent a 2-bedroom house is two different things. So a lot of times people want to keep it with the Joneses. You gotta decide what you want to do. Sacrifice for a little bit to gain, or do you want to just keep living like the Joneses?
I really like it. I really like that. I think that is a sound way to maneuver yourself.
The thing is that if you rent the house out, here's the thing. If you bought too much house and you already here at debt and you rent it out, you're not going to make a lot of money out of renting a single family house. It just is what it is, especially if you're telling me they're up here anyway. So they rent it out. Now, what do? Like, where are they going to get the leverage to buy the next house? They can refinance, but they're not going to refinance, and now their mortgage might be upside down from where they could collect for rent. So you got to be able to do something. And I think to answer that question specifically for the entire platform might be different individually depending on where people are financially. Do they have a 401k? Can they pull money out of there? I don't know.
Honestly, I think that was something to get people to think about. I think what you offered over was very thought-provoking, that if you did do it backwards and you're finding that you are just in too much debt, it might be a possibility that you may want to go ahead, sell that house and use the proceeds of the sale of that house to begin investing, rather than just waiting for those 30 years and waiting for the equity. Claudienne, as always, it is a amazing time to communicate with you. I always end up richer than when I started. I always end up better than where I started. So that's why I wanted to share your very riveting perspective. People are not going to agree about everything, but the goal is never agreement. The goal is always going to be thought-provoking so that you can be provided with a litany of information so that you can begin to make empowered decisions for yourself. Do you have anything else? I know you have a course coming up, Claudienne. I do want you to share with people about the course that you have coming up.
Well, we had it last Saturday. It was very successful. And I just want to share my journey and things that people could do to begin investing. starting from credit on down. So that was what that class was about. I'm going to have more classes. I'm having one next month. I was very excited. It was fun for me. And you know, I love to share. And I want to get back real quick about the app for the scholarships. It's called Scully. So SCHOLLY. I don't know where you can type that in the comments, but it's there. It is SCHOLLY. That is the app that you can put all of your child's information in, and it will spit out everything that they could potentially qualify for. Definitely too, Shani, I want to throw this out there. I'm a risk taker. And so I'm very unconventional. And so I don't want you guys to think Claudienne's just way to the left. I am a risk taker. I've been good at doing that. And so I've filed bankruptcy. I've reorganized. I've lost property, maybe one. I'm not going to say properties. And so I've had a lot of experiences, and I'm still a risk taker at the end of the day. And I understand short-term sacrifice for long-term gain. And so if someone needs a little bit more of an organized fashion of how to do that, we can certainly teach them that as well. And I'd like to say it's like investing in stock, right? You can be a very risky stock person, or you can be very conservative. So you can also do that in the real estate market as well.
Alrighty, so I hope that you guys were able to grab at least one thing that was going to add some value to your purse. Yes, and I want you to open up your spiritual purses. I want you to open up your bank account. I want you to open up your actual purse, because if you didn't feel richer after all of that, I'm going to make sure that you feel a little richer. I fixed my money machine, and it better not be active. There you go. Yes, it's working totally. I hope that you feel richer, because every time I connect with you, I feel richer. I'll see you guys next Monday. We will be talking about student loans. If you have questions about student loan debt, how to pay them, how to eliminate them, how the stimulus, I mean, not your stimulus check, how the pandemic is going to be impacting your payment, you want to drum down on that, I'm going to have one of my other boss babes that's really skilled, that's had the opportunity to pay down her debt a lot faster in some very, very creative ways. Also, another thing is that she's also been able to benefit from fellowships and scholarships that's allowed her to do a part of her debt elimination plan. So I do hope that you feel richer connecting with me. I always feel that way connecting with you. See you in the comment section. Laters.